Yeah, very good evening to one and all. So I welcome all of you to the web lecture on auditing standards and documentation. So we have Amit Garg over here. We welcome you, sir, for this virtual program.
Thank
So
you.
we'll start with the program with our institute motto song. You need not stand, just place your right hand on your heart as a matter of respect.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Yeah, thank you one and all. I request Chairman of the branch, Dr. Kishore sir, to give his opening remarks.
Yeah, thank you, Secretary of the branch, Jayant. So, friends, I welcome you all to this virtual seminar on this standards on auditing. Specifically, we will be dealing with documentation. A very eminent speaker, Garg is with us. He is from Delhi, and he is very much experienced for the last 20 years in this field of auditing. And we understand that he also is involved in developing certain software for automation of audits. Friends, in fact, this standards on auditing ought to be followed during the course of carrying out of audit. Of course, all these standards are to be complied with by a member in carrying out his audit function or a test function for that matter. Of course, there is a saying called Sarvendriyanam Nayanam Pradhanam. So there may be many parts in the body of an individual, but out of all, eyes are most important organ for any human being. Likewise, out of many standards on auditing, documentation proves to be one of the most important standard which has to be complied with by all the chartered accountants who are into this attest function, wherein this standards prescribes the various precautions or various documentations. Of course, in the course of carrying out the audit by an auditor has to collect sufficient appropriate evidence in respect of the opinion that he has arrived. And of course, the evidence, whatever is being gathered, is to be documented so that the auditor should be in a position to demonstrate the work which he has carried out, and also as to how he has arrived at the opinion. So friends, this documentation is a very important standard. Now, I wish our speaker will be taking us through all the nuances of this standard on auditing. And I request all of you to pay attention and get enriched with this session. Over to Secretary.
Yeah, thank you, sir. Thank you for your opening remarks. I take this opportunity to introduce Amit sir to the entire fraternity who joined now. So, Sir is a part of experience team based in Delhi. He has 20 years of experience in consulting, process design, and auditing various industry sectors. Sir is into his own practice and leads assurance division in the firm RNBP and Co. Prior to this, Sir has worked with E&Y for more than 12 years in statutory audit practice. He specializes in process reviews, control design, testing, internal audit, statutory audit, IFRS, and IAS implementation, and also in corporate filings and due diligence. He has very good project management skills, led large projects, and involved in multidisciplinary teams working against tight deadlines. He is also developing some automation tools relating to audit, financial statements, and with ease in preparation in financial statements by uploading trial balance and other certain information. He is also a faculty of IFRS and IAS course conducted by ICAI, Delhi University, and Business Management Colleges. In addition to this, Sir has also experience in handling capital market transactions. So with this brief introduction, sir, its floor is ready, sir. You can start your presentation. Thanks for giving this opportunity.
Thank you, Janji. Thank you, Nityaji, and entire Vijayawada branch managing committee. Thanks for giving me this opportunity. I will try my level best to put across my views and so that make it interactive and also fruitful and knowledgeable session for the participants. Okay, so let me just share my screen first for PPT. I hope the PPT is visible to everyone.
Yes, sir. Yes, please go on.
Okay. So as you know, today's time is very, very tough as far as auditing profession is concerned. Not tough because there is no business opportunities. There is a lot of business opportunities, but the kind of regulatory reviews are there. It's very, very challenging, and it requires that we need to keep updated ourselves with the latest amendments. And along with that, we all know that we are very well versed in auditing, and you are dealing in, day out with this kind of activity. However, the documentation is at the back always. This was this scenario. But now the scenario has changed, and it is going to be very, very tough if we are not documenting whatever we are doing. So there are a whole lot of standards, whole lot of auditing standards. Anyone have any idea how many auditing standards are there? Any thought you can? I think Nityaji, participants can throw the message in the chat box. Or
Yes,
not?
sir. Chat is enabled.
Chat is enabled. So whatever is your thought, how many auditing standards are there which is applicable as on today? Any idea? There is no marking, there is nothing. So as of now, there are 40 auditing standards which deals with the audit and reviews. And on top of that, above at the top, there is SQC1. There is SQC Standard Quality Control Standard, which deals with the administrative structure and control environment of the firm, of the audit firm. So first, you have to document your policy. Either you are the proprietary firm, you are practicing individual name, or you are a partnership firm. Doesn't matter. But if you are handling any audit assignment or any assurance function, you have to comply with all these stuff. Are you happy or not happy? But it is a compulsion. And believe me, these are the life saver as of now. If you are not documenting, your life is going to be very, very tough. I'm not terrifying you. I have practically experienced it. I have practically gone through the regulatory reviews, and you cannot imagine the kind of review is being done. Just to give you an example. So if you open any standard, auditing standard, they are reading line by line what is written over there, and they are asking how you have complied with this, line by line. This is the level of review. So as we all know, we are doing very hard work. We are working late nights, stretching hours. We are ensuring to meet all deadlines, but you have to save yourself as well. Definitely, you have to meet the deadlines, you have to give the satisfaction to the client, but simultaneously you have to take care of yourself as a practitioner, because whatever you are earning, it will take a minute to go outside. It's kind of a penalty in case anyone means by unfortunate means or whatever, it you're stuck up in any regulatory review. So the whole objective of this session is just to tell you what we need to do so that we can save ourselves, and we can demonstrate during the regulatory reviews. It's not necessary that all files are picked up, but some, based on the threshold, there are various thresholds based on which different review external reviews happens, and even you are not aware that your file is being reviewed. There are financial reporting review board, FRRB, QRB is there. So automatically on certain criteria, balance sheets are being picked up and cold reviews are being done. Just your financials are being reviewed, whatever you have signed. And based on that, the technical reviewer is giving their observations on those financial statements. And based on those observations, if the authority or the committee finds it necessary that the observations are serious and material, it can be referred to the disciplinary committee of the institute also. And once that goes there, the letter will definitely come to the auditor who is signing the balance sheet, and a lot of again that review will start, and the life is going to be very, very tough. And I'm telling you practically, because I am also one of the technical panelist or technical member of the FRRB board, FRRB technical reviewer in FRRB. So I have also reviewed many files. Based on that practical experience, I am just telling you all this. So let's move on. Then we will discuss all the nuances. But don't worry, if we document, there is no structure how you have to write, what word you have to write, what should be the format. Nothing is there. But to assist you, lot of enablers has been given or published by the institute or various other authorities, which can be used to document. But as the word document indicates, document means whatever job or whatever you are doing as part of the audit process, please write in any language, whatever you know. Write whatever you are doing, what procedure, what is in your mind, why you are picking that transaction, what you will do, what you have got the evidences, how you verified that. So whatever is you are doing, that has to be written in any format, in any language, but that should be documented. Okay, so let's move on. Then we'll definitely discuss each and every aspect of the standard. So as the first screen indicates, the skills of an accountant can always be ascertained by an inspection of his working papers, because when regulatory inspections are happening, they will just ask you, please deliver the working files. We don't require you. We will review, then we'll call you. So your file should be such that you are not required to be present before the reviewer. They should be able to review the files, and your files should be self-speaking. Whatever you have done, that is written over there, he should understood that. Okay, now the question comes, he should understood means if he is not aware about the auditing standards and all that, so that is given. So we'll discuss that is experienced auditor. So experienced auditor means he is aware about the auditing standards, audit process, industry. This is given. If he has that knowledge, he or she has that knowledge, so he or she should be able to understand your working paper. So that we'll discuss. Let's move on with this background. So agenda of today is we will discuss some of the observations of the NAFRA, and I hope as you, it's spelling is wrong, so it is NAFRA observations. So then we'll discuss overview of SA 230 audit documentation and overview of SA 505. I hope we will get certain time at the end. So we will discuss the external confirmations as well, because this is one of the very, very important and significant part of the whole audit process. So this is a material for educational purposes. So starting with the SA 230, that is audit documentation, and this standard is effective from 1st April 2009, means 2009. So it is not a new standard. It is there since long back, and practices have developed, and a lot of standard documents are there which can be used to document our work procedures and the conclusions, or lot of other things which we encounter during the audit process. Okay. So what the NAFRA says. So NAFRA, as I know that in today's world, at least if you are in the audit profession, you know what is NAFRA. I hope everyone is aware about NAFRA. Anyone? What is NAFRA? Hello, I hope I'm audible to everyone. What is NAFRA? What do you mean by NAFRA? National Financial Reporting Authority. So it has the authority to supervise the function of the auditor. In simple word, that's a very, very small thing which is in the scope of the NAFRA. This had been set up under Section 132 of the Companies Act, and it is kind of a quasi court. So all civil court, basically, you can say all civil court authority is there with NAFRA. Very, very huge power. And you have seen in recent time, we are definitely a small practitioner, but all the large firms, I'm not taking name of anyone, and you know what I am trying to say, all the large firms has been reviewed by NAFRA. In terms of 4, 5, 6 firms has been reviewed by NAFRA, and the kind of report which has been issued is really terrifying. Despite the fact all big firms have all the resources and competencies, despite that fact, still there is a lot of room for improvement. So I will request all of you at least go and read all those reports which has been issued by NAFRA. So whatever, just why I am sharing all this, because SA 230 is there, you can go there, you can read. Just I want to take this opportunity to share my practical experience here. So whatever literature is there, that is available on the institute's website. Everybody, you are chartered accountant, all very experienced person, seasoned auditors, you know how to read and everything is there. But I want to use this platform to share my practical knowledge with you, so that we can improvise or improve our documentation and at least save our lives in today's environment. An environment is very, very, challenging in today's world. So what NAFRA is saying, the auditor is required to prepare audit documentation that is sufficient to, the red portion is very, very important, is sufficient to enable an experienced auditor having no previous connection with the audit to understand the nature, timing, and extent of the audit procedures performed. We will discuss in detail what do you mean by nature, timing, and extent of the audit procedures. So the NAFRA is saying if your audit file is given to any individual person who is an experienced auditor, he should be able to understand your files, what you exactly have done, how you have planned your audit, how you have executed your audit, and how the conclusions have been reached, and whatever conclusions have been reached as per your files, whether that is corroborating the audit opinion which you have issued. That should be there. All legal aspects, and that's the basic theory. So this is something which is required by the regulators. I know institute is ours. They are safeguarding us. They are with us. They are supporting in all ways. But now there is external world who will not spare us if we are not complying these standards holistically. There is no way that they will, spare us. The kind of reports and penalties and implications we have seen in recent past, it's going to be very, very tough. I'm not terrifying again, but I want to make you aware that this is happening so that you get vigilant. Okay. So let's move on. Just a sec. So now other observations which NAFRA has indicated, some of them I have just picked up for reference here. Time recording by the auditor, EP, is engagement partner and members of the engagement team, is mandatorily under para 9 of SA 230, which requires the auditor to record the nature, time, and extent of the audit procedure performed in the audit documentation. It means in their review, they have identified that you have performed the audit very good. You have done a good job. But what you have done is not written in your document. What is nature, what is timing, and what is extent? If any one of you, let's discuss one by one. What do you mean by nature? What exactly you want to document? Anyone would like to throw any light? What do you mean by nature? Nature of the audit procedure. I have specifically highlighted it in red font, because these are general language. We read standards, so that goes in flow. But each meaning, each word has very, very specific meaning attached to it. So nature is the kind of procedures, or the nature of procedures which you are required to perform. It may be inquiry procedure. It may be verification of the agreement or verification of the underlying document. It may be observation. What do you mean by observation? For example, when you are going to the stock take. So as per the requirement, you have to observe whether the procedure is fine. It is a management function. Actually, the physical verification has to be done by the management, not by you. You have to observe whether the procedure which the management is following is okay or it's fine or not. They have issued the instruction properly, who is carrying the audit, tagging is there, material is stacked properly, that is being counted by the deputed person. So you have to observe that. So that is the observation procedure. Confirmation. What is the confirmation? Means it may be direct confirmation from the third party, right? Reperformance. What is reperformance? Like bank reconciliation. So bank reconciliation has been prepared by the management, but maybe on sample basis you want to reperform. You mean as based on the risk, you want to reperform that bank reconciliation. So that is a reperformance procedure. So this is the nature. These are the types of procedure which you are performing. So you have to write what kind of procedure you have, what is the nature of that procedure which you have performed, documented. Like if I talk about trade receivables, debtors, So you have decided for the assertions. There are assertions. So at financial statement level, largely there is 7 assertions. So one of the assertion is existence. So what is the risk for trade receivables? The risk is that, so whatever trade receivables are there, whether that is there or not, means that amount exists or not, whether the management has to take that amount from the debtors or not, that is the existence assertion which applies to trade receivables. So to mitigate, to satisfy your risk or to mitigate your risk for that assertions, you may obtain direct confirmation from the debtors or the trade receivable or the party. So that is the nature of the procedures. That is the direct confirmation. Now the second is timing. What do you mean by timing? Any thought about it? Timing. Even if you understand the word, you will get the answer. Timing means when exactly you want to perform the procedure. You want to do it at the year end, before the year end, after year end, when you exactly want to perform. For example, I'm just continuing with my example. That is the confirmation. So you want to perform it before the year end, that is called interim period. So for example, you are doing an audit of March 2024. So maybe considering the nature of the company, you may be required to sign the audit report by, for example, 31st May or mid-May, right? So maybe you will not be able sufficient time to circulate the confirmation. Then confirmation will come, you will analyze, there may be differences, then you will ask for the reconciliation from the management. So it will take to complete your procedure. So you can ask the management to perform interim procedure. So you can say on December basis, we will ask the confirmation. So on December 23 balance, you will circulate the confirmation, balance will come. If there is a difference, we will ask the management to provide the reconciliation between the balances. And because you are giving the opinion on the year-end balance, so you need to perform the roll forward procedure. That is called roll forward. Basically, roll forward means from December to March, you have to bring this balance to March. How you will bring it? So whatever balance is there on 31st December, add all sales which has been done to the party, deduct whatever payment has been received or any for other adjustment, and then you will reach to the closing balance. So whatever adjustments you have done, means sales, payment and other adjustment, you have to perform certain procedures on this also to reach to a balance of 31st March. But this is the way how the audit or this is, adjusted, because maybe the audit report has to be issued based on certain time, and you don't have time at the year end, after the year end, so you can perform certain procedure at the year end. So coming back to the timing, so that is the timing when exactly you will perform that procedure. Then the last word is extent. What do you mean by extent? Extent means the quantity, to what extent you will perform the procedure. So now there may be thousands of debtors. Does this mean you will circulate the balance confirmation for all the 1,000 parties? No. It depends on the materiality. So there is a concept of materiality. Definitely, it is a risk-based audit. So you have to mitigate your risk. So which party you have to confirm, that you have to decide. Certain judgment is there, definitely. If there is a very specific party, there is a specific business. So you can say, for example, related parties. So you can say for related parties, because risk is higher, so you will ask for 100% confirmation in case of related parties. For other parties, you can say, I am just giving the example, 25% of my tolerable error. So parties above that balance, I will ask the confirmation. So that is the extent, means 25% of my tolerable error, and 100% in case of related parties. So that is the extent. So basically, all these things has to be written in your documentation. This is the expectation from the standard, and that is that the enforcement of that standard is being ensured by the regulators, whether that is being done or that is being, that quality audit you are performing, because ultimately you are issuing the audit. You have that authority, and that authority is coming from the Companies Act. It's not a small authority which you are getting. You are chartered accountant. There is a lot of onus on you. There is a lot of authority you carry. So you have to use that authority judicially. So that authority you are not misusing, that is being ensured by NAFRA. So what they are saying, these are the standards, you have to follow it. Okay, one more thing. Why we are following, why it is mandatory that we have to follow auditing standard? Is it mandatory? Anyone would like to answer? Why we are following it? Is it mandatory? Or recommendatory or optional for the auditor? Anyone? And if it is mandatory, from where the authority is coming? Thanks, Nitaji. From where the authority is coming to these essays? Yes, you're writing that in the report. From where the authority is coming? You're writing why you are following it. Because the authority is coming from the Companies Act. Section 143, subsection 10. It says the auditor has to comply with the auditing standards. The biggest authority is coming from there. It's not optional that it's your wish that you want to, because you are signing. So it's your wish that you want to apply it or not. No, because government or the Companies Act is giving you a lot of authority to sign that balance sheet, and based on your signature, based on that balance sheet, lot of investors, creditors, government, employees, public at large is relying on that balance sheet. So it is your duty that you have meticulously done your work. And if there any leniency, so there is again a authority is there to check that. Like we check internal controls of the company, similarly your controls is being checked by the regulators. So it's not like that only you are auditor and you have to check that internal controls and stuff of the company, but there is the authority above you also, just to ensure that your authority is not, your right is not being misutilized by you. So that authority is coming from Companies Act, and again the mandatory requirement is coming from the Companies Act. So it is mandatory, you have to comply with all standards. As of now, 40 standards are there on audit and review. Then we have 3 standards which talks about the assurance engagements other than audit and reviews, which is and then there are 2 standards which talks about related services. So standards on related services, and other is specific standards, maybe compilation and all that stuff. So in total 5 other standards, 40 auditing standards, and 1 SQC. In total 46, you can say, that standards which is relating to auditing of historical information or compilation or other specific items, kind of assurance functions you are giving on that. So in totality 46 standards you have to read by choice or by force. You have to, if you are signing a balance sheet, I don't think so in today's time you have any choice not to read that. Not only read, just to understand and implement that. And believe me, it's not technical, it's purely logical. If I take a very normal household example, if I'm making a, I want to buy a house, I make my budget from where I will bring money, how I will invest, what is the cost which I am looking for, where is the location which I am searching. So same, and you record that, so either in mind or in you document it, or even your household budget on a monthly basis, you write what you have spent. So that's a logic. So basically you should remember, because you are not a super human, that you can remember everything. So basically, you have to write what you are doing. So in the similar way, the corporates are working, or you are giving these services. So whatever you are doing, you have to document in the similar way based on the logic, because subsequently someone can ask how you have reached to this conclusion, what kind of procedure you have performed. So you have to demonstrate that whatever is written on in the law, whatever is mandatory things for me, I have complied with that. The whole objective of standard is to ensure that, what is the objective of an audit? So objective of an audit is to issue an audit report, and the standards is giving you guidance. If you are giving an opinion, if you are issuing an audit opinion, you have to comply with certain requirements, and that is written in these standards. So you have to go through that. And again, I'm saying it's not so technical, it's very plain vanilla, nothing complicated like Ind AS or even for some meta accounting standards. It's pure vanilla, but you have to ensure. And even you are not required to have a huge structure, huge infrastructure to implement that. You can imply that or apply that guidance in whatever way you want, but that should come out from your document. It may be plain, paper. You just circulate, whosoever is your employee, you send the mail that these are the accounting policy, that these are the firm policies. We have to ensure this. Every listed company or every company who is having a turnover so and so has to ensure independence. So definitely independence has to be ensured for all the and irrespective of the threshold in case of assurance function. So whatever is written, so you can write in any form, in any document, and you just say heading, it is my firm policy, and you have to ensure it. And whatever, whosoever is the audit team, just you before that, or every year or every quarter intervals, regular intervals, you mail it to the team member that you have to ensure. So in various ways you can ensure the guidance which is given in the assurance standards or auditing standards. It's not required that you need a huge infrastructure for that. Okay, so coming further, so the identity and the role of the EP communicated orally to the management, meaning thereby you have accepted the audit, and even the management is not aware, management has not met you during entire year. Just engagement letter went, there is a name, this is the partner, and you have not met with the management. So this is the observation by the, again by NAFRA. You have to meet your management, because there may be certain matters which you need to discuss, or even if there is no matter, at least you should meet on a regular interval, or if you are doing a yearly audit, at least you meet on the year-end engagement, year-end audit, that we are doing audit, it's going, even it is going smooth, so just communicate that so far it's going well and good. So at least maybe management may have something to discuss with you, or even certain procedures are there which you have to discuss with the management, whether any fraud is being done, or you have observed any fraud, uh, there is any whistleblower which you have received, or you are aware any other issue which you want us to take care, or which you want to communicate to us. So a whole lot of matter is there which you need to discuss with the those who are charged with corporate, who are charged with the governance. So that's in nutshell, that's the management in case of a non-listed. So you have to meet, you have to do a lot of inquiry procedures, and based on inquiry procedure, maybe you have to verify a lot of underlying documents. So it's required, it's not optional as such. Okay. So next is the audit firms had explained that they were not required to keep all agreements which they have audited. So the NAFRA says it's fine, but as there are thousands or lakhs of transactions, you are just verifying a few of them. And if you are not keeping that, you are violating the basic principle of documentation. So it's not that you are not required to keep that. Maybe all agreements is not required. At least if you have read, you can take the extract of that. Maybe agreements may be running in thousands of pages, but whatever are the relevant provisions of those agreements, please take copy of that and keep in your file. For rest of the things, you can make this synopsis and document that. But by saying that it's not required, no, it's required, and fundamentally, or it has been raised by the NAFRA that it's required, and definitely in all the standards of documentation says that we have to keep all the significant or material agreements in your file. Again, I am repeating, just if it is running in volume, so it is running in huge pages, please take the extract of those, right? Then all the standards has to be, followed holistically and harmoniously. Maybe there, as we discussed, that there are around 40 standards, auditing standards. So all standards has certain requirements. So this SA 230 is general documentation standard, but this is not the only standards which talks about documentation. More or less all standards talks about certain documentation. Suppose if we talk about engagement letter, so there is a specific engagement standard on that. So they say that you have to agree the terms with the management before starting the work. So whenever you are entering into an agreement, you have to document that again. So a lot of requirements are coming from other standards. In addition to this, in addition to standards, there are various requirements from the regulatory or the specific acts. For example, if we talk about banking act or insurance act, there may be specific requirement from them that this is the required, this you have to ensure, you have to comply with this law. So how you are complying with that law, that needs to be documented again. That will become part of your documentation. So in nutshell, if I summarize it, requirement may come from anywhere, maybe from standards, maybe from specific acts or regulators. So whenever you are issuing any opinion, please ensure whatever documents you have verified, how you have verified, who performed the work, how it was reviewed, you have to document that. And just to show you a practical file, just let me share with you how you can do it. This is just a sample. This is not the best practice, I will say. There may be various other good things also, but how I have done it. So just I want to show you one file, maybe that may help you how you can do it. Okay, let me share that file. I hope you are able to see the Excel file.
Yes, sir. Yes.
So this is plain cash and bank file. We go verify cash in hand, bank balance. This is that file. But what I have done to perform the procedure that I have written over here, obtained a complete list of bank accounts, whether it's debit or credit, traces the balances as per book balance. This is nothing new. You are doing this on a daily basis in your audit. So, but where we are lacking, we are not documenting it. Believe me, we are spending the entire nights or whole lot of time on audit. We are mitigating our risk, no doubt about it. You are doing very hard work, but that hard work will go in vain if you are not able to substantiate that whatever you are saying, you have actually performed that. So definitely, if you have performed, if you ask me practically, we do over audit. We are very, very emotional towards audit. So you don't have to bring the emotion in the audit. You have to be very practical. I'm not saying you do over audit. You do audit as per the requirement. And as per the requirement, they are not saying you do a 50% checking, 100% checking. They are not asking you. Believe me, they are not asking you. It is a risk-based audit. We have to select samples out of the total population. just whatever samples you are checking, but you do that checking meticulously, and whatever you are doing for those samples, please write each and everything. I give you a small example again. Suppose you want to verify purchase order, so you are doing the audit of purchases. So what you will do, you will say, I will take the entire dump of purchase orders during the year. So first you took the dump, means the entire list of the purchase order. So you have to ensure that the list which you have obtained is complete. If it is not complete, so you have not selected your samples rightly. So you have to ensure that the list is complete. That's the first step. Then now there are supposed 50,000 purchase orders, and let's say you have to verify 20. Out of 50,000, you have to verify only 20. I'm just taking an example. First of all, how 20 you will select, which sample you have to take. There are various audit techniques. Even in Excel also now there is sampling tools. Or otherwise, what you can say, you select every certain transaction, pick a certain transaction so that you can get the total number of 20. So simply just you divide 50,000 divided by 20. So there is certain number. Every that line or every that purchase order you will select. So you will get out of 50,000 20 samples. So now what you have said, there is no bias in selecting the sample. I took the dump, I arranged it in the sequentially or the chronologically. Every certain transaction I have picked for sample, you write it. I obtained the list, I ensured that population is complete. Then I arranged it in the descending or ascending order. Then by dividing certain this, I selected every, for example, 100th transaction or whatever number comes, 50,000 divided by 20, whatever it comes. Okay. So every that transaction or purchase order I have picked up for verification. So nobody can challenge that you have picked a particular purchase order specifically. You have left the purchase order which was maybe containing certain issues. So nobody can challenge because you have rationalized, you have rationally picked up the sample. So after picking that sample, so whatever procedure you have to perform, definitely you can verify. Whole lot of procedures are there. So procedure may be primary procedure or secondary procedure. Primary, that is called PSP, primary substantive procedure. What is primary substantive procedure? Meaning thereby, this is mandatory procedure which you have to verify. You cannot avoid it. That is PSP. OSP means other substantive procedure. Meaning thereby, it depends. Means OSP you can add if you need additional comfort on that. Or there may be a risk is high, so you can add certain other procedures. That is OSP. But PSP, primary substantive procedure, you have to perform definitely without fail on those 20 purchase orders. So that is one of the example. Again, coming back to this cash and bank file. So you can just see everything is written here. If you have foreign currency, so you have taken RBI rates. How then? This is very important. You see, this seems very, very small thing. This seems very, very small. Conclusion, and the account is fairly stated. But believe me, writing this, the account is fairly stated, can save your life. This just line can save your life. Because in various inspections, it has been observed that you have written all these procedures, whatever you have done. But by performing these procedures, what is the conclusion which you have achieved? Maybe by performing these procedures, you have come across certain issues. How you will conclude that there is no issue? If you have not written, it means maybe you have not performed it or you are not able to conclude it. So this is again a point, that conclusion is not written in the file. So just by writing that the account is fairly stated or the procedure you have not, it's simple language, or you can write any other language that out of the above procedure you have not come across any issue which needs to be noted here. So you have all the procedure performed is satisfactory. There is no issue to record here. Or if there is any issue, you can record that issue here, whatever way. This is the factual statements. Basically, I performed this procedure. Whatever is the result, I documented it. Then who performed this procedure and when? Who reviewed the work? When? These are very, very small things, but we missed it in your documentation. You can definitely correlate it with your files. So this is the first sheet which I have written, that what I have done on these items. For example, these are the accounts. This is the balance, current year, previous year, difference, percentage difference. Simple. Again, what I have done on this confirmation. So these are the accounts. These are the references. Now it is showing that I have actually performed it. I have referred it to my working paper. And what is the type of procedure? Mode of communication, direct confirmation. I directly send to the party for the confirmation. And this is the balance. And these are the actual confirmation which I have received. These are this is I have documented like this. So there may be thousands of ways to document, but this is one way I have documented it. Right? Then RICO item. So this is the RICO item. So this is my balance. This is the difference. Means this is the bank. This is the difference which is coming in the bank RICO. This is a summarized way, and this is as per the bank statement. And this is the difference. And this is the balance as per confirmation, and difference is nil. Means after reconciling, I compared it with the confirmation, and difference is nil. Or there may be a difference, and there should be some justification for that if there is any difference. This is one way of documentation. This is other sheets. So basically, more or less, what I want to demonstrate that this is how the documentation can be done by simply just writing what you have performed. Okay. So let me just close this. Let me open another file. Let me open one more file for the benefit of larger population. That is expense file. I'm just sharing that. Yes, this is another file, expense. I hope again this is visible. So other expenses. I hope you have seen these kind of expenses there. Consumption of stores and spares, packing material, inspection. Again, this is the working paper reference. This is the link file. You go there. These are the balances again from where this is coming. So if you go there, so what exactly you have done. So all link file is there. And again, you have to write work done here. What exactly you have done, which I have shown in the previous file. What is the work done? So these subsequent sheets is the backup of these files. And then if you go there, monthly and rent analysis, if you can see this file, all month rent is written over there. What is the location? What is the monthly rent? So it doesn't mean ki whatever management has recorded, that is the final amount. Maybe they have not recorded certain amounts. How you will identify that? So in one of the example for annual or in the rent, you can plot the monthly things. If there is any missing, so if you can see this, these are the missing. You will say why there is no rent in this column. So either that lease has been terminated, or if that has not been terminated, maybe the employee, maybe the company has not received the invoice, so that's why they have not booked. So in that case, you will say no, because you are following the accrual basis of accounting, you have to record it, make the provision for that. There are various ways, again, just how you can do the documentation. Just I'm now closing the file and coming back to my presentation. Any questions so far? So this is we have covered. So need for the working papers, why it is required and where it is written. in each literature, so there is a handbook of auditing pronouncements issued by ICI states that while discharging their attached function, it will be the duty of the members of the institute to ensure that the standards are followed in the audit of the financial information covered by the audit. If any member for any reason is not able to comply with that, you have to write the departure, and by doing departure, what alternative procedures you have performed to meet the requirement of the standards. Then in your Chartered Accountant Act, it is written that you have to document code of ethics, compliance with the standards on auditing and companies act, peer review, FRRB and QRB. And believe me, just I have done FRRB review, I have done QRB review, and even you are not aware your files are being reviewed. These are the board by the institute. They are picking the files on certain threshold, giving it to the technical reviewer. They are taking their report. Based on their report, they are taking the action. If there are kind of a medium kind of observations, so maybe they can issue the letter to the auditing firm or the partner that you need to improvise your working. Or if matters or observations are serious, that can be referred to the disciplinary committee of the institute. And if it goes there, then definitely you will be thrashed, and you will be asked for a lot of documentation to prove that you have complied with the requirements, right? Then ICI disciplinary mechanism, NAFRA, SEBI, and other regulators. Everywhere this documentation is required and will save your life, definitely. Okay, overview now. Coming to the basic part of this standard, that is 230, we will discuss scope, objective, definition, and requirements. And that this is very simple. Again, I am just saying logic. I have spent 1 hour because just to discuss my practical experience, because that is more valuable in terms of, because literature is definitely there, you can go and read, but to bring that practical experience with that theoretical will make the session more useful. So the requirements is just a timely preparation of the audit documentation of the audit procedures performed and the audit evidence obtained, assembly of the final file. Now, okay, before I move, just we have already covered 1 hour. Any questions so far? Any questions so far? If there is any question, you can throw it in the chat box. No question. Okay. So let's move on. So the scope, what is the scope of the standard? Scope is auditor's responsibility to prepare audit documents for an audit of FS. So it's this standard says whatever audit you are doing, you have to prepare your audit documents and have to keep in your files. Then to be adaptive to the audits of other historical financial information. So it has to be adapted. It's not standard. It depends on the nature of the company you are doing, the size of the company, and nature of the audit assurance you are giving. It's a limited review, it's a full-blown audit, it's a specific audit, depends on that. So the documentation has to be adaptive to that. Then the specific docs requirement of other essays do not limit application of this essay. As we discussed that there may be other standards like engagement letter you have to sign, and there is a separate engagement letter. Then assess the risk of material misstatement. There is a again separate standard on that. So you have to document how you have assessed the risk of material misstatement. So all those will be covered, and that will not limit the application of the standard. So this is in addition of all those requirements. Laws and regulations may establish additional requirements. Very, very important. Laws and regulations. So now there is a separate essay on this. Laws and regulation essay, I think 250. Essay 250 talks about laws and regulations. So now, if you are aware about the change in the code of ethics, there is very huge and cry in the market about NOCLAR. If you have heard the word NOCLAR, NOCLAR is non-compliance of laws and regulations. Now, as a code of ethics that has, because international agency, that's the ISBA, notified that. So based on that, because institute is a member of that ISBA, so as a procedure, you have to bring your guidance at the international level. So that NOCLAR has been inbuilt in your code of ethics, right? So now code of ethics, this NOCLAR says as an auditor or as a member now, because code of ethics is applicable not only for audit assignments, because whatever services you are giving, that is code of ethics is applicable. So if it is coming in the code of ethics, it says that you have to comply, you have to not comply, you have to ensure, that your client has complied with all the laws and regulations. If not, then you have to bring it to the notice of the government authorities. Or in case of audit, definitely have to bring it in your audit report, maybe in terms of qualification. But my question is, no, essay is already there, 250, that talks about laws and regulation. Then what is the difference between, what is the charm of bringing NOCLAR in code of ethics when I already have essay 250 in my literature? That essay, as I said, that these 40 standards is applicable for the audit or review engagements. So essay 250 is applicable when you are performing an audit. But there are other services which you are giving to the client, which is not in the nature of audit. But code of ethics is applicable to you as a member of the institute. So even if you are not doing the audit, that NOCLAR will be applicable. So I'm not sure, because earlier it was deferred till September 2022. I think that was made applicable. So I'm not sure, but NOCLAR is there in your code of ethics for some time, because there was huge and cry, it was deferred. So now what is the current status? But it's there in your code of ethics. And the main thing which I want to discuss here is essay 250 will deal only with the audit assignments, whereas NOCLAR will be applicable for all services which you are giving as a member of the institute. And NOCLAR is very, 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 very harsh, at least if you talk about as a member of the institute and you are giving services, because there may be a whole lot of laws which are applicable. Even the company who is working in industry is not aware what all laws are applicable to that company. It's difficult. And now it's your responsibility that you have to ensure all the laws has been complied by the client. Even the client is not aware about all the laws applicable to that. So this is very, very, harsh requirement and very, very challenging. So, but no choice. It's there. It's there. So please ensure, because there is very, very less focus on this laws and regulation. We go because we are very, very close, and the financial statements are very close to our heart. So just we go, just give us the balance sheet. We want to audit it. We took the balance sheet. We did very, very meticulous audit. But we have not seen what all laws are applicable to the company which you are auditing. Again, you are in a mess. You may be in trouble. So now there is a standard, understanding the business. Again, there is auditing standard which talks about that you need to understand the business of the client and the environment in which the business is being done by the company. So when performing procedure relating to that standard, when you will understand the business, when you will discuss with the management, that's why in the initial phase I said you should meet the management, you should meet the higher cadre employees, or maybe the managing director or CFO or the functional heads, whatever, to understand what all our laws are applicable, whether any whistleblower policy is there, whether any issue is there, that you need to understand from them. So that, and that is a mandatory procedure. You have to document that how you have done, how you have understood the business. So all these things are mentioned in understanding the business. What is the IT environment? What all laws are applicable? What is the organization structure of the company? What is the funding structure of the company? Whether it's a highly debt company, it's leveraged or not. Whether the application, what are the controls environment? So it's highly technological company, or it's manually control driven company. So whole lot of things is there which you need to discuss with the management, and you need to understand, and accordingly you need to design your audit procedures. This is very starting phase of the audit, which is called planning. But usually, as we know that we are a small firm, we are a small practitioner, we don't have all such infrastructure. This is all excuses. Nobody is going to hear you. The fact is that you are not a small person. You have a big authority of signing the balance sheet. So don't treat yourself as small. You have a very big responsibility, big right, which you possess. And that right is coming out of Companies Act, which has been passed by the Parliament. So it's not a small, right you are possessing. So that's why you cannot escape by saying that we don't have that much infrastructure to comply with all the requirements. You have to. If you are doing the audit, I will not say please leave the audit. No, I will not say, because in today's time, if you practically talk with me, it's a huge business. Definitely it comes with a lot of responsibility. You are getting a business for 5 years. Your appointment for audit is for 5 years. And roughly, definitely it will go until unless there is a huge issue and the employment is terminated or the engagement is terminated in between. Again, the termination process is very lengthy. The client will have to go to NCLT or company law board. From there, he has to take the permission. Even the company cannot terminate your appointment. That kind of independence you can bring in you. And just coming back to the business, definitely everybody is working hard, and everything is important, but along with that, earning and business is also important. So every year, in most of the business, you will see you have to, every day you have to go in the market and you have to earn. But here in audit, you are getting a business for 5 years in one engagement, along with a big right of signing the balance sheet. But nothing comes free. It brings with a lot of responsibilities. And as of now, what we are discussing, that responsibility is compliance of the auditing standards. And out of those auditing standards, one is the audit documentation. And it's not a big requirement. It's not, unreasonable from the regulators that they are asking that whatever you are doing, you should be documented. You should document that. It's not unreasonable. I will say that this is a very basic requirement, and it gives, believe me, just with again practical experience, I am saying, if you're documenting everything, and along with the documentation, one aspect is you are sending your team to the audit. How many hours, how much time they have devoted on the client by performing the audit. You need to record that as well. And believe me, when you start recording that as well, at the end of the audit, you will realize you are running into loss. Whatever is your expectation of per hour recovery? You expected that before starting the audit, you will spend 500 hours to complete the audit, but you ended up spend 1500 hours on that engagement when you're recording everything. And believe me, when you are doing it, and you, after the end of the audit, you came across to you come to know that you have spent 1500 hours, you will definitely go back to the company and will say that there is overrun on the audit. and nobody, no law is stopping you that you cannot ask for the overrun from the client. You did some estimation, and based on that estimation, fee was quoted. But actually, because there is a lot of back and forth, you deployed the team, you are not getting the required information from the client. They are taking huge time. It doesn't mean if they are not giving the audit on time, you will withdraw the team. Still, team is sitting there. They are a lot of wastage of hours also. But at least you have deployed your team. You cannot withdraw if client is delaying 2 days, 3 days, 5 days. Means at each level there is some delay. So you ended up spend a lot of hours on the engagement. So definitely you can go back to the client and say this is the employee-wise, staff-wise sheet of the hours which has been clocked on your audit. And in all, we have spent 1,500 hours. But when we quoted the fees, that was based on 500 hours, which we expected, because we expected that whenever you have agreed the timelines, we will get the required information on those dates and we will complete the audit in time. But that was not done, or the information was not provided on time. That's why it took whole lot of time. Or during the audit, you came across certain issues, you came across certain significant matters which took a lot of time to discuss, or maybe you may be required to employ certain expert to evaluate that. For example, there is a huge litigation which you came across during the audit, and you are not the legal expert on that. So you requested the client, or you may directly employ certain, as a part of the audit team, you can employ certain expert to evaluate the case, whether, because it is impacting your going concern assumption also. So you employed that. So it took a lot of hours. It took a lot of time. So in nutshell, if you go back to client will definitely hear you. Either if you're demanding the overruns, maybe you can get the overruns also. Or if not, at least from next year onwards, you will quote the right fees to the client and you will get that fees. So it's not only compliance, definitely it's on a business side also. You will get your fees, increased based on definitely a reasonable efforts. It's not unreasonable on your part also, because actually you have spent that much time. It will help. Okay, so moving on. What is the nature and purpose of the documentation? Definitely it assists engagement team in planning and performing. So when you're documenting whatever procedure you have to perform, it will help the junior team members, because it's not possible every time you are sitting with each and every team members, and what you have to do, you have to explain. So if you have documented it, so that will percolate automatically to the bottom level of the team, and they will understand what exactly the procedures you have to perform. Assist in supervision and direction. So how you will supervise, how the direction. So if things are written, it will help. Assist quality control reviews, create accountability, very important, accountability. So it's not always, definitely engagement partner is the responsible for the overall engagement, but if your team is there, which is qualified, because if they are a member, so code of ethics apply to them also, even if they are as employee in your firm. So there is a code of conduct, means members in practice or members in industry or other members. So one way or the other way, even the engagement team is also equally responsible for the engagement, and it creates the accountability. It's not possible for the engagement partner to review each and every details in minute. So definitely, if team is there, team is working, you are reviewing the work of the team. So to held responsible your employee, it will help in that, because you have uh, note down you have created your entire work program or audit schedule. Then it is again the responsibility of the team members to ensure that. So by that way, you can also hold the below team member responsible for them, and can make them accountable whatever work they are doing. Then record matters of continuing significance, assist external inspection. That's the whole objective. at least, because as we already discussed a lot about NAFRA in today's world means, believe me, it gives goosebumps when we heard about NAFRA. And one way I will say, uh, definitely it is a painful process, but believe me, in a period of 2 to 3 or in another 5 years, if we say, there will be huge quality in the audit, because the kind of actions they are taking, it's it's very very harsh, along with lot of penalty. They are debarring the members also. But definitely, until unless there is a, you know, uh, force, and things doesn't happen. I am not saying it is right or wrong, but profession is running since long time. Still lot of fraud, lot of things are happening. But believe me, as I a reviewer on many assignments from the institute side or from the, other side also, but quality of file, believe me, is not up to the mark, and lot of deficiency is there. Even in certain files, nothing is there, and report is signed. No document is available. Good. When I asked where is the documentation, no, this documentation is the client's paper. Why we need this documentation? So we seen and we returned the documents to the client and we issued the opinion. This is the kind of response we are getting. Right? So now who will believe what you are saying? Whether you have actually performed the audit or not, who will believe when there is no documentation in your file? So basically, the crux of the cheat is do the audit which you are already doing. Don't afraid, don't leave. It's a good thing, good business, but with cautious. I'm just alarming you, I'm not terrifying you. And it's not complicated at all. Just whatever you are doing, you have to document. And literature is there, you have to just go through, write in any paper, communicate. If I talk about SQC, so it talks about the control environment in your company. Suppose if it is you are auditor of a large listed company, so definitely as engagement partner you are auditing, but who is independently reviewing your work also as audit, because client is very large, stakes are very high. So there is a concept of engagement quality reviewer, EQR. So whether it's there, so it can be any person in your firm, it may be another partner, so you can get it. So just write that this is the partner in your documentation, that it is a partner in the firm, and this has been assigned as a EQC or EQR, means engagement quality reviewer of the engagement. So you do your audit, but that partner will also without getting involved in each and everything, but he will review the entire things, whatever call you have taken, whatever planning you have done, whatever audit procedures you have framed considering the industry. So he will give their input. They will ensure that audit is being done in the required manner. So within the firm, you can create that. Now, question comes, it's a very small firm, we have only one partner or two partner, how we will identify? So believe me, if you are doing such a large company, right, and there is no person internally, so definitely you can hire the external person. It's not, there is no harm in that. It's not necessary that you are expert of each and every item or every area. Suppose I am doing the audit, it's not necessary I am expert in tax also. But when you are doing an audit of a company, there may be huge tax litigations in the firm. So how you will comply with the requirements if there is a huge tax litigation which can, threaten the going concern of the company? So how you will ensure? You are an auditor, as you say, it's not necessary that you are a tax expert also. And maybe other person is not there who is tax expert in your firm internally. So definitely please collaborate among yourselves, make a group. Maybe some person is doing the tax work, there may be some audit related, assurance related function. You are doing the audits, there is other person who is expert in legal, who is expert in direct tax, who is expert in indirect tax. huge lot of, there are maybe various areas, and different person may are the expert on that. So just collaborate with them. It's not necessary that you have to, uh, on a recurring basis, you have to pay them. On a required basis, on an assignment basis, definitely. It's not like that you are outsourcing the audit. Basically, you are employing the expert, and there is again a standard, specific auditing standard, which allow you to take the help of the expert. So if you are not expert in any particular area, you can definitely take the help of the external expert. So you employ that, negotiate whatever is the fees based on your understanding, because it's a mutual. Sometimes you require them, maybe sometimes they may require you. So understand that. Based on that, you involve the expert and get it verified internally and document it that you have employed the expert. You got this verified. There is a huge litigation. Document it in your documentation. So uh, generally, what I do, just I prepare uh, two significant documents. One is called, at the planning stage, audit strategy memorandum, that is called ASM, audit strategy memorandum. And other is called, when I conclude the audit, there is a summary review memorandum, SRM. So you can name it whatever way you want. But what is the purpose of what exactly you that contain in the document? So in ASM, okay, I show you that ASM on my screen. So on a sample basis, I will show you SRM and ASM. Uh, this is just a sample. Again, not always a best practice. Mhm. Let me. Is it visible? I hope
Yes,
this paper
yes,
is
yes,
visible. So
yes,
if
it is
you see,
visible.
yes, yes, thanks. So if you see this document, just what is the background of the company? So what it contains, it's the background of the company. Whatever is the company, you have to write it. What is the scope of the audit? So you have been appointed. So in whatever law, and what is the requirement? So uh, you can write that. Then what is the overall control environment? And in control environment, one aspect is internal control environment. So who is in charge? Who is supervising that department? What activities are happening in uh, that department? Then there may be IT control environment. What is the software the company is using? It is SAP. It is specific. It is customized ERP. It may be Tally, or it may be any off the shelf software which the company is using. So you have to write, because it depends. Or if it is SAP, and maybe okay, I take an example of uh, telecommunication company, big company, and it is highly technological company, and you are auditor of that company. And it's again, and it's not necessary that you are IT expert also. You are a financial auditor. And what, at least with me, I am not the IT expert again. So, but I do audit of a company which use a lot of technology. So what I do, just I take the person from outside who is the IT expert, so I can get the IT application controls vetted from them. In today's time, because in today's time, lot of things are happening in the system. Input is directly coming, means on the source, means purchase order is being, once that requisition is created or purchase order is created, after that just things are happening within the system, and the output is the payment has been done. But you selected the vendor, you sent the quotation, selected the vendor, then issued the purchase order, then received the goods, then control, or based on receipt of the goods, you did the quality control check, then that was issued for the manufacturing, then finished goods were prepared, then that was sold. Again, the whole lot of processes there that is happening in the system. And as a financial auditor, what is happening in the system, you are not expert of that, but how you will give the opinion that everything is fine? Maybe if there is a wrong logic in the system, maybe any system, any software that the company is using, or I giving you example, there is a logical, suppose in overall control environment, there is a logical access control. So that access to the software is not restricted to the designated person. Anybody is coming and they can change the logic in the system. So if they want to perform the fraud, they can. So how you have ensured that whatever logic is running in the system that has not been tempered during the entire year which you are doing? So there is again a log, there is a lot of things being created in the system. You are not expert, you will not be able to verify. So the expert will come, they will verify it, whether any whether any change has been done during the year. If there is any change has been done, whether that has been tested by the users, that has been confirmed by the users, only then it was again produced on the production server, that was set on the production server. So all testing and everything has been done. And again, this is the overall environment. But day in day out there may be application control, so there may be different controls, application controls, manual controls, IT dependent controls. So application, if I talk about application controls, so application controls you cannot verify because you are not at, maybe you are not IT expert. So how the control is working? Suppose if I take an example, purchase order is being verified, means the procurement team is issuing it, some other person is approving it, how it is being done. So whether there is any change in the authority or someone else is approving the authority purchase order. So the IT person who has the knowledge of that, it may be a chartered accountant, it may be a non-chartered accountant, depend on the expertise. So you can get it vetted that whatever application controls are there, it is running effectively. If it is not running effectively, you need to perform alternate controls. So that you need to verify whether whatever controls has been inbuilt or when you discuss, because nowadays you have to give the opinion on the ICFR also, in internal control over financial reporting. As I hope you all are aware, you have to issue along with your main report, there is two separate reports. One is the CARO, another is the ICFR report, and you are required certain, means there is an exception to certain kind of companies which on which it is not applicable, but largely now it is applicable, right? So suppose it is applicable, then again, how, first of all, how you have verified the controls? And believe me, in a mediocre size companies, even the companies does not have process notes, risk control metrics, and they don't perform testing. Even if they have process notes and RCM, whether management testing is being done or not, because in case of a listed company or large size company, it is mandatory requirement because SEBI requirement is there, Companies Act requirement is there. But even for a smaller company, for private company, it is required, because in a board minute, section 134 or 135, I think, that is required, that board has to say that all the controls and all system is effective and it's there. If they are giving this statement, then how you are verifying if they are saying it is there? But if it is there, whether it has come to you, because you have to also perform the testing, because you have to issue the report as an auditor. If it is not there, first you are giving the opinion on that, and second, management is also ascertaining that everything is there, but actually it's not there. It's again a very, very risky situation, and this part is very, very weak. Just believe me, in smaller size firms, in mid-size firms, we are not even paying attention to this process notes and risk control matrices. If it's not there, how you will verify the control? You don't know how many controls are there which you need to verify. So just coming back to that control which I am talking about, why I have brought this aspect, because when I am talking about the control, IT control, this control will come from there only, RCMs. If that RCM control is there, whether that control is IT control, it's a manual control. Manual control you will definitely verify. Being a financial auditor, it's your competency. But if it is IT, then you may need to hire someone who is IT expert. They can verify on your behalf. You can document it, and accordingly you can give the opinion. Then what is the planning materiality and tolerable error? Because it's a risk-based audit, we know it is a risk-based audit. You cannot verify 100% transactions. So you have to select certain transaction. Now, which transactions you have to select? That is written materiality standard is there, but you have to compute that. So it may be whatever percentage is there that you have to decide. There are various ways to calculate materiality. It may be based on the profit, it may be based on the turnover, it may be based on the net worth, it may be based on the share capital, but it depends majorly. Okay, now my next question is, how you will decide that it should be based on the profit or it should be based on the turnover, it should be based on the share capital, whatever? How you will decide that, where it is written? So basically the objective of the audit is that you are auditing for the stakeholders, right? And stakeholders means the investors or the stakeholders should be able to take the informed decisions based on your audit or the financial statements which you have audited, right? So what is in their mind? If I say it is a startup company, if it is a startup company, the stakeholders will want the top line should increase, means your revenue should be higher. So that is the deciding factor. I'm just giving you the example. It's not the hard and fast rule. Just I'm giving you the example. In case of a startup company, the focus of the stakeholders is on the top line. They say your top line should increase. Once you establish, definitely the profit will come. So the decision of the stakeholders or the investors will be driven by the turnover. So you need to base your materiality on turnover. Suppose it is an established company, so the focus is on the profit. Focus is on the profit. So the stakeholders want their decision or they decide based on the profit. So you should decide your planning materiality or the tolerable error based on the profit. So it may be EBITDA, earning before tax and depreciation. It may be other ways. So you need to assess when you are understanding the business, who are the stakeholders and what is their objective and what is their philosophy, what is their vision. So all those things needs to be documented. From there, you will decide on what base you need to calculate your thresholds or the materiality. So that materiality, in this case, I have decided on the pre-tax income, profit before tax, and then identification of significant account. Now, what is the basis? How you will decide the significant account? It may be account which is greater than your tolerable error or the materiality, which are having high volume transaction, which is having of a specific nature transaction. So this is all documented based on which how you have decided your significant account, that is written over here. Then inherent risk. Suppose in your organization there is a huge internal audit, related party transaction. So related party transactions may have internal inherent risk because that is very prone because management is involved, or your parties or your controlling parties are involved. So that is having a high inherent risk. Maybe where is the involvement of cash and carry outlets, or where retail outlets are there. There is who use cash is involved. So your cash and bank balance may have a higher risk of higher risk. So that then you need to calculate combined risk assessment. Combined risk assessment means your control risk and your inherent risk. Based on that, you will assess that your combined risk assessment. It is high, it is low. Based on that, you will decide your audit procedures. So everything is written. Basically, the objective of showing this document is objective of showing. Just a second. Okay. Sorry. So basically, the objective of showing this document is how you can document. Again, it's not a very fancy or very cumbersome document. It's simply written in simple plain English what exactly we have done. Then in case of estimates, how you have evaluated that. It is all written over here. What is the role of direct tax team and indirect tax team? Who are the specialists which you will involve in your audit? Then what are the significant risks? Suppose company is giving huge discounts to the customer. So discounts may be one of the risk. Other matters, significant auditing matter. Sales cutoff is one of the issue. There may be understatement or overstatement of the sales. If company is in the setup phase, there may be a huge capitalization. So FA, fixed assets verification, or fixed assets and capital work in progress may be higher risk areas. So consolidation may be there, or guidance is written over here. Then sign off at the end. Who has prepared it? Who has reviewed it? And when? So this is documenting that if you see the content of this document, largely I'm saying lot of auditing standards, whatever is saying, that is written in that is being complied, means whatever is the requirement of the standards, that is coming in this document. This is the planning, basically what you will do. Now you will perform the audit based on this. Then there may be another document. Just let me share that again. That is, in my terms, just I'm saying it is SRM. I'm sharing that. I hope this is visible again. So
yes, sir, it is visible.
So this is summary review memorandum. Now this summary review memorandum means whatever you have decided at the planning stage. Now what is the results of that? That I am documenting here. That's the document. Scope of work was there. Now this was the materiality. So these are some of the issues which I have identified during the planning stage. Maybe there may be further issues subsequently, but whatever issues I have identified during that period, now it is a conclusion. What is the conclusion of that? We have obtained the specific representative phenomenon in this regard, further period this and this. So means whatever procedure I have performed, based on that, what is the conclusion? I am writing it here. But merely taking the representation is not the solution. That is not the audit evidence. You have to perform the procedures, and your conclusion is to be documented somewhere. So in this, I am saying these are the documents where everything is written over here. So this is the outcome of the audit. All significant matters which are there, I have documented in this letter, which is called significant. This is a summary review memorandum. So I'm just coming back to the presentation now. I hope you are able to correlate. Means again, I am just stressing that there is no hard and fast rule how you have to document, but you have to document. That is the requirement. Okay. So let's move on now. Objective is just prepare documentation that provides sufficient and appropriate records. Now, what do you mean by sufficient and appropriate? Sufficient means in terms of quantity, it is enough. My risk is mitigated by these. Appropriate means it is relevant. If you are doing the audit of March 24, if you take the audit evidence of March 23, it is not relevant. It is not appropriate. Another example, bank confirmation. If you are taking a bank statement or any debtors confirmation that from the client, so it depending on other factors, but generally it may be not that high or persuasive evidence as compared to which you have got directly from the debtor. So appropriate means that should be relevant. It should be appropriate for the situation or for the period which you are auditing. So sufficient in terms of quantity, appropriate in terms of quality of the evidence. Evidence that audit was planned and performed in accordance with essays and laws and regulation. This is the objective of the documentation and all essays. So now let's understand few of the definitions. Audit documentation. It is nothing but a record of audit procedures performed, relevant audit evidence is obtained, and conclusions reached. So summary, basically, whatever audit procedure you have performed, like audit procedure performed means you have observed the inventory procedure, you have obtained direct confirmation from the data, you have obtained direct confirmation of the bank balances. This is the procedure which you have performed. Audit evidence you obtained means the confirmation which you got from the banks or from the parties. Conclusions reached means you are comfortable with the trade receivable balances because you circulated the balance, you got the balance. There is no difference that has been confirmed by the third party, and definitely other procedures. I'm just taking some of the examples. So this is the documentation, that is record of procedure performed, evidence obtained, and conclusions reached. This is also known as working paper or work papers interchangeably. Audit file. What is audit file? Audit file is nothing but a folder or storage media of these audit documentation. It may be in physical form, it may be in electronic form, right? Containing records that comprise audit documentation of a specific engagement. This is the audit file definition. Then audit documentation we discussed. Now important is experienced auditor. This is a person, he or she, who is having a practical audit experience on a reasonable understanding, having a reasonable understanding of audit process, standards on auditing, and applicable laws and regulations, business environment, audit, and financial reporting. So basically, I'm saying whosoever is the auditor or regulator, inspector, who is doing the inspection. So we are assuming that that person is having sufficient knowledge of these processes. Only then he will be able to understand our audit work papers. So this is given. Yes, law is saying experienced auditor is there who is reviewing your files. They have the knowledge what you are doing. Yes. Any question so far? So more than halfway we have crossed. Nitaji, any question so far?
Sir, actually, as of now, there are no questions. We have around 80 previously, and still people are continuing. Our people
Yes.
are somewhat shy. Definitely, maybe at the end they will be posting some questions or maybe asking directly.
Okay. Okay. Thank you. So now moving forward, so the timely preparation of audit documentation. What do you mean by timely preparation? Timely preparation means when actually the audit procedures are being carried out, that time on a real-time basis you have to document the things. It's not like that you have completed the audit and after 2 months, after 3 months, you are documenting that. So the expectation of the standard is that on a real-time basis, when actually you are performing, when you are planning, when you are obtaining evidences, when you are reaching on the conclusions, that time, whatever is the things you have to document. So prepare sufficient appropriate audit documents on a timely basis, which enhances, because if you are doing on a real-time basis, it enhances the quality of the audit. It facilitates effective review and evaluation of audit evidence and conclusions reached, and documents prepared after the audit is definitely less accurate because maybe you are again not a superman. When you are doing the things, it's easy because you remember everything what you are doing, so you can document it. But if you are doing it afterwards, then maybe many things you don't remember and your documentation may remain incomplete. Okay. What should be the form, content, and audit documentation? So audit documentation complete means we say it is sufficient if it is sufficient to enable experienced auditor to understand the nature, timing, and extent of the audit procedures. I have already explained what do you mean by nature, timing, and extent, and the results of audit procedures and the audit evidence obtained, and significant matters, conclusions reached thereon, and significant a professional judgment with respect to conclusions. Judgment means, for example, companies incurring a huge losses. Still, you are saying it is a going concern company. You are still going concern is applicable, relevant. So how you have decided that still companies incurring huge losses? They are into losses since last 2 3 years. Still, you are saying your uh, full net worth is fully eroded. Still, you are saying it is a going concern. So basically, it can be, but you need to prove or you need to document that still it is a going concern. Maybe because of certain reasons, there may be a future orders. It may be a they have different plans, but you need to verify based on which you are saying still it is a going concern. And let me tell you one thing here. Recently, there is a order from the NAFRA in which an auditor gave a MOE, matter of EOM, emphasis of matter, emphasis on matter, and NAFRA said it should not be EOM, it should be a qualification. And on that auditor, penalty has been imposed, and I think even for certain period, he has been debarred just because the matter was a qualificatory matter, and he has given EOM on that. So it's very, very judgmental. But now the question comes, what is EOM? What is a qualification? EOM is also that is coming in the audit report. So basically, practically, let me tell you, lot of people is using a EOM as a to avoid the qualification in just simple words by giving, because as such EOM is emphasis of matter is not a qualification. It is just a a direction, or you can say it is an important matter in which you are drawing the attention of the stakeholders or the users of the financial statements. But you are not saying this is wrong or this is right, or there is non-compliance. It is not a because it is not a qualification. So lot of matters which is of the nature of a qualification. So this is the base which I am saying, why I am discussing here, because the premise which I am discussing in EOM was given, but it is what is a qualificatory matter, because there was, I think, complete erosion of the share capital or the net worth, or company was incurring huge losses, and there may be a whole lot of, because whole lot of issues may be there, and the auditor has given EOM. So the NAFRA is saying, no, this is not sufficient just by drawing EOM. So how you have evaluated just saying that there are budgets, but budgets are not there. There are no confirmed orders, so there is no visibility of the future. So have you actually verified that? Either you are satisfied or unsatisfied. There is no midway. There is no midway. You are saying that it may or may not happen. If you are auditor, you have full right to ask the explanation or to verify the documents. So if you are satisfied based on the review of your documents, so you will say it's complied the requirement. So no need to give qualification or whatever. But if you are not satisfied, then definitely it may be, it may or may not be. So, but if that is a serious enough or it's of a very pervasive nature, so if it is a qualificatory matter, you have to give the qualification. You cannot leave that just, you cannot substitute the qualification with the EOM. Right? So difference is that qualification means something on which you say that requirement is there of the accounting standards or some other requirements on which the company has not complied with. So there is a non-compliance. But EOM is not an, you cannot say it is non-compliance, but a matter is important enough that you're drawing attention in the audit report that before means the users of the financial statement should also pay attention on this matter. It is important enough. So this is the fundamental difference. But it is again, EOM is not a substitute of the qualification. And in current scenario means, I give you another example. In many balance sheet, you will see it is written that balances, mean trade receivables, trade payables are subject to confirmation and reconciliations. What are you saying? If it is subject to reconciliation, if it is subject to confirmation, it means you have not performed procedures. Are you satisfied if this work has not been done? It is subject to reconciliation. You don't know whether this balance exists or not because confirmation has not been obtained. And still you are saying the report is true and fair. I'm assuming the balances are significant. I'm not talking about the material things. If it is significant and this statement is coming in the financial statement that this is subject to reconciliation and all that stuff, then how you can say it is true and fair? You are not saved by writing, because either, by the way, you are not writing it because financial statements is the property of the management. So these are the management financial statements. So management is saved. You are not saved. Management is saved. Management said, I have told you this is subject to confirmation and reconciliation. Now, what is your duty as an auditor? Is it acceptable or not? So that you have to decide. If it is material, balances are material enough, definitely it is not acceptable. You need to ensure that whatever trade receivables, trade payables are coming, that actually exist. The receivables are actually, you have to take the money, the company has to take the money from the debtors, and in case of trade payables, the company has to pay for the items which they have purchased or services they have availed. That is the real amounts. It's not subject to confirmation. So again, this is one of the thing. uh, and again, another point which I want to highlight, in a lot of balance sheet, again, you will see in the inventory, in inventory note, it is written management has subject to management verification, or management has verified it. So again, management is under obligation, or management's responsibility is there to verify and all that stuff. But what is your duty? But if management has verified, what is your duty? What is, as an auditor, is your responsibility on that item? Your duty is that you have observed that verification whenever management did it, and you are satisfied that whatever procedures the management has performed is acceptable and it is as per the requirement. Means considering the item, high value items has been covered, uh, ABC item categorization has been done. Based on that, sufficient staff was there to verify it, and competent staff was there who knows how to handle, how to count. Maybe why I'm saying competent. For example, if you are doing a physical verification of a cement company, there is a heaps of, for example, limestone, slag. There is a minerals. So suppose I talk about limestone, which is the basic raw material of a cement company, or a slag. That's kind of, the granules. So that is heap, or in case of a coal also, that is heap of coal. That is as a raw material is coming in the books of the company. How you will verify it? Everybody is not competent to verify that heaps. How there is a specific specification or technical person who is able to measure that heaps. So if you have learned that mathematics, that triangles, and what is the width, what is the dia of that, what is the radius, then all that stuff gets involved, and based on that, the technical person will tell you the measurement of that material. So that's why I'm saying the competent person was there to measure that. Again, in case of a oil and gas company, if you are taking the inventory of crude oil that is in the tanks, so how you will verify the material? So again, there is a specific, very technical things how the measurement is taken. They dip the measurement or certain rope. Based on that, they see what is the level of that material inside the tank. Or again, in case of a cement, that is in the silos. So how the measurement is taken of those silos. So that is very, very, technical thing. So you are again not expert, but you need to ensure that the person who is measuring that finished goods or the cement or the oil or that heat is competent enough. That is your duty. So if that sufficient staff is there, competent staff is there, then it means you have performed that your procedure, you document it, and you have complied with your duties. Law is not saying that you should be, Superman, you should know you all the laws and everything, but they are saying if you're not expert and if you're giving opinion on certain matters for which you are not expert, so take the help of others. Involve the expert in your audit, get it vetted from them, then you conclude, are you satisfied or not? But by taking just a management representation letter from the management will not serve the purpose. You are not relieved from your duties. Okay. So your documentation will definitely be influenced by these parameters. So size of complexity, nature of audit procedures, identify risk of material statements, nature, extent, and identity and exceptions noted. So based on that, your documentation will also uh, be adaptive or the change. Not necessary to include superseded drafts or working papers, meaning thereby when you are doing the actual audit, so basically there may be multiple versions every time there is a correction, so the new version comes. So whatever are the superseded documents that is not required to be kept in the final file. So don't demonstrate that you want to keep. It is not advisable that uh, to demonstrate that how much work we have done. Just see there are 50 versions or 40 versions of financial statements. On all that there is a remarks from us. We have improvised. So when first cut was received, that was very, half completed, but we have done a lot of efforts. And after 50, 60 versions, that final balance sheet was come. So it is not a, matter of uh, appraisal, or it's not matter of good thing, because it shows that financial statement close process is very weak of the company. If you are working on a 50th or 60th version of the financial statement, it shows that your financial statement is the closure process, books closure process of the company is not good. So your internal controls are not good, and still you are giving a clean report on the ICFR. There are just, that's why it's not a good thing that all things are coming in that. So whatever are the superseded versions, please remove that from your working files. That's not required, clearly written in the standard. Oral explanations by themselves not adequate or useful in further explanation. So you discuss, as we even discussed this thing initially, that you met with the process owners, you met with the managing director, you met with the CFO, you discussed a lot of things, you documented, he explained, you just documented, but whatever he is explaining, have you verified that? For example, CFO is saying, suppose company is running into losses, and you went to the CFO to discuss the going concern assumption. So CFO explained that just we have got a big order, and that will start from 2 months now, and the company will be in profit. You documented that, but have you actually verified that executed order? If not, then explanation will not serve the purpose, or that discussion will not serve the purpose. Sometimes there are discussions for which there is no document, but how you will say that these words or these explanations has been given by the CFO? Because if you say to the client, practically I'm telling you, if you say to the client that please send me the mail, whatever you are saying, you please send me the mail, he will not send the mail, or she will not send the mail, he will just explain you everything. So the right way of what I think is can be done, best can be done in that scenario, they will, if they are not writing the mail, you write the mail that we, as per our discussion meeting, you prepare a minutes. We discussed today on this aspect and as explained. So these are the summary of the points which we understood from you. Just write whatever you want to write, whatever he has explained, and send it to the client. As per our understanding, these are the minutes and this is what we have understood. We have written here. If there is any disconnect, please let us know. Either if there is any disconnect, they will come back, or otherwise, at least the best you can do in this situation, I'm just saying. This is the last resort. There is some simple explanations which management is not sending you over mail. Just you do the reverse way. You send the mail writing that we discussed it today. If there is any disconnect, please let us know. So document it. So there are various ways to document the things, right? Yes, if it is a small entity, so documentation is definitely, in terms of a larger organization, is less. So where you are preparing multiple papers for each and every item. So for a smaller entity where suppose there is no team or even the partner is working entirely all the things, or maybe a simple if one intern is there. So there may be various scenarios. So even if it is a small things, it does not relieve the auditor from this compliance. So the form and content may be different. The extent of the documentation may be different, but there is no way that you are relieved because it was a small entity. So still you have to document, but yes, the form may be different. Examples of audit documents may be the appointment formalities and communication with previous auditor, like NOC you take from the previous auditor that needs to be documented. It's a, I will say it's kind of a mandatory requirement that when you are incoming, you are a new auditor, you have to take the NOC from the previous auditor, who is the outgoing auditor. For example, you have sent that requirement, but still that previous auditor is not responding. Does this mean you should not accept the audit? No. Send the reminder. Send one to reminder. But still, if they are not replying, definitely you can go for the audit. You can opt for the audit. You can accept the audit. But you have performed your procedure. So the requirement is that you should send a letter to the previous auditor. If they are not sending, you have also sent the reminders, but still not responding. What else you can do? So you have performed your procedure. But if it is you are doing it through courier, you are sending hard copy, please preserve the POD, proof of delivery, that you have sent it. If it is mail, through mail, so preserve the mail that you have sent it to the mail, but they have not responded. But the important part is whatever procedure you are performing, please document that. If you have performed the procedure but you have not written, the evidence is not retained in the audit file, it is deemed as no procedure performed. The golden rule of documentation is, if work not documented, it is not done. Whatever you do. But if not documented, it is assumed it is not done. Very, very golden and general rule. Engagement letter format has been issued by ICI. Minutes of pre-audit meeting means you want to start the audit. So before that, you have discussed with the client how to start, what are the significant items. So whatever you have discussed, so that needs to be documented. Audit program and plan. Calculation of materiality levels. We have already discussed that based on the expectation of the stakeholders, you should decide your materiality. Sample selection, again, how you have to select the sample. Being a small firm, it's not necessary that you can deploy a lot of softwares, but whatever you are doing, one simple example I have given you, in case you just segregate the population. So if it is a related party, 100%. Non-related party, do some chronological ascending, descending, or in date wise, and whatever sample size you want to take. So total population divided by that sample size. So whatever is the number, that number you can pick as a sample. So there are various ways again to select sample rationally, but there should not be bias. You have to prove that the samples you have selected has not been biased. It is totally unbiased, whatever you have selected. Process notes and test of internal control systems. So again, we discussed this. You need to obtain process notes because it is written over there what is the process how the transactions are moving, how the functioning is being conducting in the company. So that is written in the process note. Test of internal control system. So what are the controls over there? Internal audits are there. You need to obtain that report. Now it is a mandatory. Even as per your CARO, you have to report whether you have obtained that internal audit reports if it's applicable, and you have reviewed that. Earlier, what was happening, even the reports have been taken, even nobody was reading that. But just see whatever reports are coming. Maybe there are a whole lot of issues are there in the internal audit report, but you are issuing a clean report. There is a disconnect. Again, other information. There is one para in the audit report also, other information. For example, board minute. Your board is issuing a report, right? They are saying they don't have control, or for example, they are saying it's very tough time for the company and we don't have any further orders to continue with the company, and there is a whole lot of challenge, but there is no discussion on the going concern in your report. Even the managing director in the board is saying it is very tough to continue because there is no business for the company, and in your report you're saying going concern assumption is still valid. So you need to corroborate your audit evidences with the external things. But this is the definitely internal things. There may be a media, in case of a large company, media reports may be there. Now whole lot of external factors, newspaper articles, lot of things may be there. Just to corroborate that information as well. And definitely a good input is from the board report. So what is written in the board report, at least if by the time, because most of the report is prepared after the audit is done, at least you ask the company to provide the draft report by that date when you are signing the report. So maybe in the draft you will find that something is inconsistent with the procedures or the conclusions you have reached. Even the NAFRA have observed this, that in case of an audit report, the auditor is saying something different, but the management in their board report is saying something different. Analysis and conclusions thereon. Analytical procedures, issue memorandum, summary of significant queries. So these are some of the basic documents which should be there in the audit documentations. What is ML? Letter of management, letter to the management. This is not management representation letter. Management representation letter is taken from the management on various representations which they have provided. But ML is a document which you are issuing to the management saying that these are some of the improvement points which you want to highlight. So you give a letter to the management saying that please take care of this going forward. That is a management letter. That is letter to management, ML. But make sure in ML there is no significant deficiencies there or significant matter is there which you are saying is not there. For example, you are saying there is no process notes, there is no RCM in the company. Just to please the management, you want to tell them that we have evaluated and we seen that there is nothing. You have written in the ML and given to management and you documented it as well. But on the other side, you are giving a ICFR opinion, ICFR report wherein everything is clean. No, nothing. If on the other side in ML you are saying there is no process, there is no RCM, then how you have evaluated the controls, how you have tested the controls, right? If you are saying that there is no process of bank reconciliation in the company, and you are saying there is no risk in the cash and bank. So again, be vigilant what you are doing, because sometimes we get enthusiastic that we want to tell the management these are the issues, and they will appreciate you. Oh, you have brought certain issues and we will take care. So just to please the higher management, please beware, correlate what you are reporting. Another example I am giving you. When you sign the audit report, generally it may be after, because you have certain days, I think in 45 days or 60 days, you have time to generate UDIN. UDIN It's not necessary that on the same day you should generate the DDL. You can generate later on also within the prescribed time period. But you are signing the audit report on, for example, audit meeting or the board meeting happened on 31st May 2024 for adopting or approving the financials of March 24. You signed on that date. And the UDIN was generated after 4 days, for example, on 4th June. And that UDIN number is not manually written. It is in the soft copy. You copied it, you printed it in the audit report. It's not manually written and you signed it. What does this mean? This is a very small thing. It means you are doing a backdating. You are signing on 31st May, but that UDIN was generated after 4 days. How it can be in the soft copy? Means ideally it should be handwritten only, because you have already signed on 31st May and later on you generated the UDIN. So it should be manual. Sometime smartness may go against you. So you want to say, oh, good balance sheet, good reports are, it's clean, neat and clean, so nothing manual. So sometimes it is important because you are signing, maybe you are signing after 4 days or maybe after a week. Maybe practically it happens. Ideally it should be on the same day, but everybody knows what is the practicality. So you are signing after a certain period, after 3, 4, 5 days. But and again, that UDIN was generated later on, and you're typing it in the soft copy and generated the printout and signed it. So it is not possible actually. Technically, it is not possible. So please beware. Whenever you are not generating the UDIN on the same day, please write it manually. Don't type it. Okay. Compliance with essays and laws and regulations. Compliance with essays 230 normally results in sufficient appropriate audit documentation. So this is what we have discussed. Absence of specific documents. Docs requirement in essay does not necessarily mean nil docs with that essay. Professional skepticism. So whatever cannot be documented but demonstrated through documents. So everything cannot be documented, but the level or the quality of the documentation tells the professional skepticism which you have taken during the audit. So these are the basic things which are there in the standard. So resolution of significant matters, judgment requires objective analysis of facts and circumstances that is give rise to significant risk. Audit procedures, that is indicate material misstatement of FS, need to revise risk assessment, circumstances leading to difficulty in applying the procedures. So basically, the significant matters on which you are deciding are these, and on these items you have to be very, very careful while documenting in your files, and this should be there in the files. Finding that could result in modifications to the audit opinion or EUM. We have already discussed in detail on this aspect. Again, I'm just alarming you, not terrifying you. Understand the difference between audit modification. Modification means qualification. The modification of audit opinion and giving a EUM in the opinion is a huge difference. EUM is not a qualification, is not a modification, and it is written clearly below the EUM. This is not a qualification, and it cannot substitute the qualification. And based on this, highly, the one of the auditor has been penalized. Resolution of significant matters, documenting professional judgment. So what is the rationale for auditor's conclusion where SM mandates consideration of aspects and that aspect is significant to the audit? So these are the basic things which definitely you have to document. Basis of conclusions about the authenticity of a document when authenticity is in doubt. Okay, I give you one example now. At one of my client, I sent the direct confirmation. I send the direct confirmation for the vendors, not suppliers, for the not customers, for the vendors. Manual means through courier, I circulated the confirmation and I got lot of responses, very high response. Largely, I got the 90-95% confirmations. And when I was just going through the confirmation, I seen all the ticket means the tracking number, and the way that has been sent. It's kind of a similar. So I gone back and gone to the site of that courier company and seen from where it has been sent. When I verified lot of various confirmation, I found that confirmation was from the same place, despite the fact I circulated at different places to the supplier, but I got the confirmation from the same place. I went to the management, I asked, well, why it is from the same place. Just I was, so he explained that these are the small vendors. They come to our factory and just they signed it, and we got it couriered from that factory place. That's why this is the same place. So it doesn't mean when you're getting the even direct confirmation, you just simply take it and document it. You verify there is no suspicion, everything is fine. Because from looking at everything is same, how it can be same way of sending? Because you have sent it to various addresses, right? But if it is coming from in the similar fashion, so you should have a doubt, or there should be something red flag. Then you should go further and verify whether is there any fishy. So definitely this is not acceptable that all vendors are coming at the client place and they are sending it, or maybe they are uh, uh, even the client has sent all these confirmations, maybe vendors are not there. How do you know? I will discuss this in the second part of this presentation, that is external confirmation, how you should ensure that this is coming from the right source. That I will discuss in that. Then when SA 710 applies, the auditor key audit matters. So basically, in specified companies, key audit matters are applicable. Then what kind of procedures you have identified to perform, what evidence you obtained is something which definitely has to be in your files. And this is very, very significant. Resolution of significant matters may also maintain completion memorandum. Significant matters identify how address, cross-reference. So basically, whatever way you have addressed it, I'm taking a going concern example. Suppose it's definitely it is a significant matter. How you have resolved it? Suppose you verified the budgets of the company for the next 5 years. You verified the confirmed order which the CFO has explained that they have got it. You actually verified it. Take the extract of that, document it, that this was the issue. You have verified this. That's why you are saying still, or there may be a comfort letter from the uh, parent company saying that they are giving you a guarantee, kind of, that is called a comfort letter. They will infuse the fund on requirement basis, so that there will not be any default to the vendors. So whenever there will be a requirement of the fund, so they will infuse it in the company. So that is one of the document also, that one of the evidence that you can consider while evaluating the going concern. There are various examples. So this is some of the examples which you can refer, but that all should come in your file. But one more thing, when you are taking a comfort from the parent company, you see, parent company is sound, financially sound, they are doing well. It doesn't, maybe even the parent company is not good, or they are financially incapable of infusing the fund. So then what is the use, what is the charm of taking that comfort letter from the parent? Parent means promoter, who is the controlling the company. So if they themselves is not financially capable enough to infuse the fund. So you cannot rely on that, right? So you need to see the credibility and the ability of the parent company to ensure whether they will be able to infuse the fund in future. Because going concern, what do you mean by going concern? Going concern means all the liabilities which the company is having will be able to meet their obligations in the next 1 year. That you have to ensure. So if the company is incurring loss, cash losses, they don't have funds, banks are not ready to give the funds. So how they will meet their obligations, right? Definitely, whenever you're writing, suppose if I say that's the completion memorandum, which I say summary review memorandum, which I shown you. So you have to do the cross-referencing. Where is the actual documents pertaining to those, based on which you are saying this issue has been closed. It is especially useful in large and complex audit, which helps in efficient and effective reviews, consideration of significant matters, identifying whether objectives. So this is the basic theory, but definitely the things we have already discussed, identifying characteristics. So what exactly you want to verify while defining the procedures? So characteristics you have to define, means you have to select the purchase order, from which date, how you will select that, and who will perform and when it will be performed, who will be the reviewer, when review will be done. So write the date and all that stuff. Management, discussion with the management and with those charged with the governance. So it is a mandatory requirement that if there is matters or whatever is your outcome of the audit, you should discuss with the management. Now, from my practical experience, I tell you one example. So there was the international reviewer, external reviewer, and they were reviewing my file. Believe me, that was the international auditing standards. They were going line by line. You tell me how you have ensured it, how you have ensured this. So definitely that was written there. But when I'm saying communication with those charged with the governance, how you will prove it? Either you have sent the mail, so the presentation or the document which you have shared with the management, so document it in the file that this is the document which we have shared. So you may have sent the mail to the, generally nowadays how the business is doing or how the things are happening. So definitely you must have sent the mail. So document that mail that this is the copy of the document and this is the mail through which we have sent, and we have discussed with the, prepare the log. You visited the client place on so and so date, prepare the minutes who were present over there. This the presentation which we discussed, this is the outcome. And definitely, as I told, so after this doing this, you can send the mail to the CFO or someone. Just these are the minutes of the meeting which we have done today. So this is a sufficient evidence that this was discussed with those charged with the governance or the management. Not restricted to prepared. Okay, it's not necessary that you should prepare the minutes. So even the client can prepare. They can send the file. They can send the, and that has been agreed by you. And in inconsistencies which we have discussed, that in board minutes something else is being discussed, but in your report you are saying something different. So please correlate, discard all superseded documents. As a golden rule, you have to comply with all the requirements of the standards, auditing standards. But there may be special circumstances, exceptional circumstances, when there is a departure from that requirement. But personally, I have not seen any situation where departure is required. But if somehow you find that, means disclosing certain information or disclosing certain or complying with certain requirements will harm will not justify with the client, or there may be huge issues at the client. So you need to document that in your files and even in the if required in the report also, that certain procedures have not been performed, and what alternative procedures which you have performed to ensure the compliance of the standards. Maybe different alternative procedures you have performed to comply with the requirements. So that you have to do. And report should be drawn, the attention should be drawn in the report for the departure. Matters arising after the date of audit report. Okay, now, as we said, audit report should be prepared on a real-time basis. So you have to prepare that. Can someone tell me how many days are there to archive the file? Meaning thereby, if your audit report has been signed on 31st May 2024 or March 24, till when you can assemble your file and archive? How many days are there to? But believe me, that days are only for administrative work, not for performing any new procedure. If you have issued audit opinion, all the procedures should have been performed by that date. You should not perform any new procedure now. But yes, you can cross-reference, you can hygiene, you can delete old files. That administrative work you can do numbering and all that stuff. For that, 60 days are given. 60 days. That is given in SQC 1. It says you have 60 days time to finalize your file, but for administrative purpose. Okay. Matters arising in exceptional situation. Okay. Now, there may be a situation, there may be instances when actually something new has come up after the signing of the audit report. So you need to change your files. You need to perform additional procedure, or you need to do certain additional things in your working files. What may be the circumstances? Maybe external reviews may be there, in which some exceptions or certain new things have come. So definitely you can do that, but reason and who did it, who reviewed it. And in normal scenario also, whatever circumstances are there, what are the additional evidences, conclusions reached, who reviewed it, everything is to be documented. Okay. So assembly of files, we have already discussed. This is the maximum days as per SQC, but as a policy of your company, you can design it such a way that you can reduce this. You can say internally within 15 days or within 30 days, you will close the file. So this is the standard. This is the guidelines which has been given in the standard. This is the maximum time. Okay. It is permitted, but again, that is of administrative purpose. But everything should be written. Why change? What is the reason? Who performed the change? Who reviewed it? When? Why? Everything. All WH family you have to apply. So this is just a theory. Okay. Now one more thing. What is the period till when you have to retain your working files? Now you have conducted audit, you have prepared files. Till when you have to retain it? What is the time period? Anyone? What is the time period you have to retain your files? Again, it is coming from SQC, Standard Quality Controls. Anyone would like to answer? For how many period you have to retain your working files? It is your property. It is not client property. Any other views? What one answer is 8 years. Any other views? Out of 50 people, any other views? How many years? Suman Kumari is saying 7 years. Absolutely right. Sumanji, it is 7 years. Earlier, it was 10 years in, I think, 2009. Then earlier, just long back, it was 9 years. Now currently it is 7 years. So again, there are various cases which I have seen in the DC. They ask you the period of files for more, even after the 7 years. So that you have to decide what you have to say to them. But this 7 year is the minimum period. This is not the maximum period, or this is not the only period. So this is the minimum period for which you have to retain your working files. You can decide that you will retain for 10 years, 15 years, 8 years, 9 years, whatever. But this is the minimum for which you have to definitely keep to comply with the law. But yes, cases are there even where DC disciplinary committee has asked the paper, and definitely in the reply you can say that this is more than 7 years, so you have a policy of retaining 7 years. So there are whole lot of logics to how you can deal with them. Okay, so 7 years is done. So what is the permanent file? Permanent file is a file which will be carried forward every year. Means there is a documents of permanent nature, kind of, means longer period. Suppose KYC, risk assessment of potential client, letter of initial engagement, because now agreement is for 5 years. So it may be for 5 years, master agreement may be for 5 years, right? But definitely if there is a change in the fees, you can do the addendums. And NOC is there for the retiring background of the company or the KMP's organization structure. So these are some of the documents which is part of the permanent file. So you keep it every year when you go for the next audit. Please carry these files because you may need to refer it again. So this is the form of permanent file. And what is the current file? Current file means annual appointment letter, engagement letter, if you have not entered into master agreement, or maybe addendum every year, that is their audit plan, working papers, questionnaires, third party confirmation. This is basically the specific, this is specifically the audit procedures or specific items which has to be happened every year. For that is very engagement specific. So all these documents has to be in the current audit file. Once this is done, you will archive it. Then next year again you will have to prepare the current file. But yes, you can carry forward your permanent file. So this is the broad idea of the documentation. I tried my level best to discuss with you the practical examples during the session. So, but one important aspect is external confirmation. Let's discuss that. Then we will take the questions. Very important. So briefly, I will discuss in another 10-15 minutes, and very important topic. So whenever you are conducting your audit, so there is a standard SA 505 which discusses about the confirmation, external confirmation. There may be various type of confirmation. I discussed two, that is negative confirmations or positive confirmations. What is negative confirmation? Negative confirmation means you send the letter to the party and saying that if you disagree with the letter, then respond. Otherwise, it's assumed it is okay. This is negative confirmation. Positive confirmation means if you are sending the confirmation to the confirming party, you say, please send the confirmation. So sending the confirmation by the party is mandatory. Either agree or disagree, you send back the confirmation to us directly. This is positive confirmation, and positive confirmation is generally required and expected in standard, because maybe if you are going for negative confirmation, the client has given you wrong addresses, wrong email IDs. You send the confirmation, you will get no response, and you are assuming that it is okay. So that's why negative confirmation is avoided. Okay. So go for positive confirmation, and first take the complete address or email IDs. Now it's a time. Now it's a time for the technological era. This is a technological era. I think most of the clients send the confirmation on mail. It is allowed. It's not restricted. You can go for confirmation on mail. So please obtain the mail from the email IDs from the client to whom you want to send the confirmation. But as you know, this is a very risk-prone area, means technology. So please ensure the domain name of the client. Suppose if it is amit.garg@rnbp.in or XYZ, please check and check the domain. Yes, RNBP is there or XYZ is there or so and so, whatever is the @ or that is the domain. So please go and check that it is there. First thing. So that is the first check that you should ensure. Now the second, where now you got the letter. Suppose there was 1,000 parties. Out of 1,000 parties, you have selected 50 parties to whom you want to send the confirmation. First of all, that letter should be prepared by the client. That should be signed by the client, because only then the confirming party will entertain. If that is not authorized by the client, maybe they will not respond it. Okay, so get it signed from the client. Now, okay, question from you: the letter should be sent by the auditor or the client? Now we got the signed letter. Signed letter is ready. Who will send this letter, client or auditor? Please answer in the chat box. Who should send these letters? Auditor. It is not acceptable that a client is sending it. And another important point: should you CC in the should you CC the client in the mail? Yes or no? You are sending, I accept. You should send the audit letter, confirmation letter to the confirming party. But should you mark CC to the client or not? Please again answer in the chat box. Yes, no, or not applicable also. Okay, I got one answer. Yes. Any other answer? Any other views? Should you mark CC to client? Now I am going back. I discussed one example with you regarding the confirmation. When I got the confirmation from the same address, because client said, because these are the small vendors, and they came to the factory and all the confirmation was sent. These letters has been prepared by the client. They have the copies of that. If you are sending the confirmation to the party with CC to the client, maybe that confirmation can be sent, because you will pressurize that you are not getting the confirmation. Client will send those confirmation from those addresses. How you will verify these confirmation has been sent by the confirming parties or the client? Because these letters are already available with the client. Definitely you should not mark it to mark the CC to client, because otherwise the letters is already available. But one more thing you should do before sending the letter. What you should do: when you get the letter, signed letter from the client, please put some mark on that. Give some numbering, whatever you want. Suppose it is debtors, so you can say AP1, AP2, AR1, AR2, AR3, or any coding. Please do some coding and put that coding on that letter, and then send those letters to the client. Not the same which you are getting from the client. Why? Maybe the letter, when you get the confirmation, client is sending those confirmation, confirming party is not sending, because they have given you the wrong address. That letter will not reach to them. Client will send the address. If client really want to conduct the fraud, they can, as we have seen a lot of examples earlier, Satyam and all. So how you can avoid that situation? Please do some codification on that letters, whatever number you want to. Now send it to the customer. But don't mark CC to client, because if you are marking CC to client, the letter with that code will reach the client and they can send that confirmation to you. So don't mark CC to client. But what you can do, because suppose if the customer is not sending the confirmation, so client will say, okay, send me the mail. I will follow up with the client. I will follow up with the customer. So you forward that. Don't, when you are sending the mail, don't mark CC, but you forward that mail to the client without that attachment. This is the mail which we have sent to the client or your customer. Please follow up. This is the mail date and so and so. But don't send the mail with attachment, because ultimately the objective is here that letter with that code should not reach to the client. Now, when you will get the confirmation, if you are getting the confirmation with that code, you can identify that this is coming directly from the customer, because this copy is only you have sent to the customer, and client does not have this letter because you have not marked it CC, or even subsequently have not sent it. So either you have this copy or the directly customer has this copy which contains that code. So that's how you can ensure that confirmation is directly coming from the customer. Second thing. Third thing is, whenever confirmation is coming, you need to ensure that it is coming from the right person or somebody else has not done it. So you can call back that person also, that this is the mail which we have received. This is the confirmation we have received. Please confirm that you have sent this mail, to ensure the correct person has sent this mail. So please perform these basic procedures. Allocate some unique code on the confirmation. Check the domain name and do that calling on sample basis or to all whatever way based on the risk associated with the trade receivables that you should do. Now the next thing comes. It's not necessary that you will get the confirmation from the customers. The confirmation, maybe this is one confirmation I have discussed. It may be from customers, vendors, or for the lawyers for disputed cases. So it may be anything. But it's not necessary that you have received the confirmation. You send the reminder, even then you have not received the confirmation. Now what will you do? It's not that if you have not received the confirmation, you will qualify the report, because management, whatever procedure you wanted perform, management has supported you. They have provided the requisite information. It doesn't mean now you will qualify. So you will perform alternative procedures, because something you have to check. Confirmation you have not received. So what is the alternative procedure? Alternative procedure means, so whatever is the composition of that balance, that is called built up. For example, you have to take 1 lakh rupees from the customer. The company has to take 1 lakh rupees from customer, and that 1 lakh rupees is consist of 10 invoices, right? So what you can do, you can check the subsequent receipt of those 10 invoices. If subsequent money has received, you are fine with that. If subsequent money has not been received, so please ensure that goods has been delivered to the customer. Check the lorry receipt, check the good outward register. You have to ensure actually these goods has been dispatched to the customer. So these are some of the alternative procedures which you should perform, right? This is the some of the basic things which you should take care in the confirmation. Negative, positive, we discuss. Okay, now one important point is, if management refuses to send the confirmation, what will you do? What should you do? They are saying, no, we are not giving the letter. You should not send the letter. You are happy? You will not send the letter. So evaluate first why management is denying to send the confirmation. There are chances it's a red flag. Maybe management does not want that you should interact with the customer or take the confirmation from them because balance is wrong in the books. This is one. There may be other reasons also. So you have to evaluate, but there may be a situation suppose that when there is a dispute with that customer. So if there is a dispute with that customer, management will not give you the letter. They will not tell you to interact with them. They don't want to share any document with the party. So that is a logical reason which you can accept. So, but in that case, you need to perform alternate procedures. Definitely will not get the payment subsequently because maybe disputed. So uh, please ensure actually goods have gone. What are the correspondence happening between the company and the party? What is the case? Whether case is listed, you see the minutes, you discuss with the lawyer who is handling the case. So you perform alternative procedure for that. So I foresee one of the reason for which the management may deny for the confirmation. Then alternative we discuss subject to that we have already discussed that if in the financial it is written that it balance is subject to confirmation and all that stuff, that is not going to serve any purpose, and it means you have not performed any procedure around that. So don't accept that explanation, and ideally that should also be not written. Either there is no, again there is not a midway, there is either yes or there is no, whether the accounting or audit procedure comply with the law or does not comply with the law. Either you are satisfied with the procedures you have performed, or you are not satisfied, or if not satisfied, or you are not able to perform the procedure, there may be a limitation. Or if you have performed the procedure but there is a non-compliance, then you have to definitely qualify the report. You have to assess that. But by giving a simple note, because the financials are the management financial statement, rather management is saving themselves. You are not saving yourself. Okay, going forward, going further, uh, ownership is definitely this is your document. So even if client is asking documents, you can deny that this is your documents. Okay. Definitely, when there is a except regulatory inspections, you have to, as per law, you have to share that documentation with them. So what is the key learnings, whatever we have done so far? Work not documented, not done. But a clear, very, very clear statement, and very, very well said by NAFRA and all regulators. If not documented, not done. Documentation saves our life. Believe me, I have experienced it. It has saved our life. If documentation is there, otherwise audit profession is very, very risky. But again, it is very, very, good thing about it. Everything has pros and cons. The good thing is, again, I will say you are getting a business for 5 years, which is I don't foresee any other business which gives you again for a 5 years thing at in one agreement. Okay, useful in defending disputes or in court of law. It is helpful in the estimation of efforts for negotiating fees, which we discussed. Definitely, you can demand overrun. You can set your next year fees. I have practically experienced whatever I have written over it. Smoothen transfer to the new team, one-time involvement, one-time investment, and saving time in future engagements. This is all correct statements, practically tested. And again, I will summarize by saying that please document. Please document. That's it. Whatever you are doing, no hard and fast in what format, how, where, write in any format, but it should be written what you have done, and an experienced auditor should be able to understand whatever you have written, that what you have designed and in the planning, what actually you have performed and how conclusions has been reached, and whatever conclusions reached, there is a supporting document for that. There is a supporting corroborative evidence is there in your file. By even just I go one step further, even by just giving the qualification will not serve the purpose. If you say you have given the qualification, you are saved. No. Even if you are giving the qualification, what is the basis for that? It is not going to save your life. But everything, this is again a conclusion. You want to give a qualification, this is a conclusion. So how you have reached to this conclusion is important to document in your file. Thank you so much for your patient listening. So I tried my level best to put across my thoughts, to put across my practical experience. Thank you so much. So definitely you can reach to me even after the session. In case you have any problem, you can call me, you can write to me. I will try my level best to make myself available for answer your query. Thank you so much.
Thank you very much, sir. Amit ji, we are very much thankful for you. You have demonstrated with your practical experience, and also you have displayed us some of the documents which you will be documenting the actual work that can be documented, the example or illustrative nature of the documentation demonstrated. And also you have spoke out of our members will definitely keep in mind that documentation is very, very important as to how to demonstrate the work that has been performed by the auditor in coming to the conclusion or arriving at the opinion. And also another key takeaway from your deliberation is with regard to this what you call external confirmations. What are all the
Very, very
precautions
important.
that are to be taken, and how to know the genuinity of the confirmation also. The best example what you give, and the way in which the auditor should be exercising his skepticism with regard to even evaluating the sources from where those confirmations have been received. So thank you, sir. Thank you very much for all your inputs. Definitely, it will be very much value added and useful for our members in carrying out the attest function. So thank you, sir. On behalf of the managing committee and the members of Vijayawada branch, we thank you, and also we'll be looking forward in associating with you in future programs also.
Sure, sir.
And this being a virtual program, we can only say you thanks, but definitely if it happens to be a physical program, we would be handing over a memento as a token of appreciation. And I request you to accept our memento, which you will receive it by courier.
So your wisdom of words is definitely a memento for me, and thank you so much. Thank you.
Thank you, sir. Good night for now, and we'll be signing off, and we will meet you in another session.
Thank you, sir. Thank you.
Thank you all. Thank you all, one and all, for joining this session.
Thank you.